Welcome to the Edified Equity Podcast. My name is Dino, and here we focus on all the unique benefits associated with being a passive equity investor in an apartment syndication. You can learn more about and follow us on the web, iTunes, Stitcher, Facebook, YouTube, LinkedIn, Instagram, and our award-winning blog on Bigger Pockets. All associated links will be in the show notes. If you find this information helpful, please subscribe, like, comment, rate, and review. Today on episode number 51, I actually have a very special guest with us, Joseph Bramante, and we're going to be going through in detail a pretty interesting story. I was very happy to have him on the podcast, but as I just said in the intro, we focus on the benefits of being a passive equity partner. He's going to kind of take us through his story from a different standpoint. There's something that I really wanted. I'm really happy that you reached out so that we can share it with you, and I'm excited to hear it myself. So, Joseph, welcome to the podcast.
Thank you. Glad to be here.
Yes, thank you. So, a little quick bio. So, Joseph is the CEO of TriArc Real Estate Partners, and he's a native. We didn't know this until we started connecting recently, but we're actually cousins. I'm saying that because we're both from Louisiana. But anyway, he's from New Iberia and graduated cum laude from Louisiana Tech in 2007 with a Bachelor of Science in Civil Engineering. Following graduation, he spent 5 years with Exxon Mobil, achieving the position of business team lead for a scope of over 1 billion with a B, and responsible for driving, managing, and closing on over 500 million in construction and logistic contracts. He purchased his first property, which was a 26-unit complex in a great location, shortly before leaving Exxon Mobil, and then he spent the next 2 years transitioning full-time into the industry. And that's the story we're going to dive into today. His first 7 years in the industry, he has acquired 5 properties, a total of 437 doors, and he spent anywhere from $5,000 to $30,000 a unit on renovations, and this averaged over an 80% increase in NOI on every property, which is very impressive because if you know anything about how multifamily is valued, it goes off of the NOI, and it goes off of what the cap rate is for that market. So improving it by 80% is tremendous. In 2017, he acquired the property management company he had been solely using, rebranded them as TriArc Real Estate Partners, and his 2 expert partners each have over 30 years of property management experience. So their plan is to grow a portfolio of 20,000 doors over the next 10 years. So without further ado, again, Joseph, welcome. And is there anything in addition to what I just shared that you would like to expand on?
No, man, I think you did a really good job of muscling through it. Appreciate it. I know it was a mouthful on some of those things. I need to work on probably condensing that some of that stuff. So, happened a long time ago. So,
yeah, no, well, it's good though. No, I mean, it's all you and it's there. And I wanted to build because the story you have and then what you're going to share with us is it's just fitting for this podcast, again, as we focus primarily on people interested in being equity partners. You have kind of a different spin to it, and we're happy to jump right in. So start at the beginning. Tell us your story.
All right. So the beginning. So I guess the beginning for me was architecture and buildings. I've always loved real estate.
Yeah.
And so, growing up, my mom was like, all right, you got to be an architect. You want to build these things. And so went to college that first year, and I realized really quickly that architects don't make any money. And I also had an equal passion for money. And so I was like, and plus, it's really hard to get a job as an architect. I mean, kudos to the guys who do it. Much respect for them. But, man, that's a real tough industry.
Yeah.
So I went civil engineering because, there's some options there, and did a couple of jobs interning in your traditional kind of consulting field as engineer, AutoCAD, stuff like that, and you're working in an office. And, I looked around and I didn't see a lot of upward mobility. I was like, man, the only way I want to get promoted is if somebody passes away, this wasn't for me. So then, I was still going forward with it. And, luckily 3 months before graduation, Exxon and Chevron came to town and interviewed with both of them, and they hired me. And or Exxon hired me, and I remember not knowing anything about oil and gas. It was never the plan. It was just like a right turn kind of at the last minute, and I figured, if it doesn't work out, I mean, who's not going to hire me? So I still had that kind of hiring mentality. So anyway, go over again with Exxon. They moved me to Houston, so that's how I ended up in Houston, still in Houston. And then within a couple of months, they shipped me overseas, because my whole objective was to make as much money as I could as quickly as I could. And didn't know a whole lot about corporate politics and stuff like that, and that kind of came to bite me towards the end of the story. But anyway, so I'm overseas. First year's in Houston, you gotta get that basic training. But then that second year, I was over in Australia, which was a pretty cool assignment. I lived here, and then our project went in country to Papua New Guinea. So I was in Papua New Guinea for about 2.5 years, and which was our highest paying job, which is why I originally signed up for it to begin with, because most of these oil providers or oil and gas companies are based on an uplift. You go to these difficult locations, you get additional compensation. So that was when I paid the most. So I'm there, and all my managers, so we're living on a compound. So there's really not a whole lot to do except work. And you wake up, your driver takes you to the office, drops you off. You work from like 8 a.m. until probably 6 to 7 p.m. Just depends on what's going on. And the driver picks you up from the office, brings you back to your compound, and that's your life. So it wasn't a whole lot to do. There's no movies, there's no bars, there's 3 bars and 2 restaurants. But 2 years of that, it gets really old. So anyway, you get to know everybody really well because you're hanging with them all the time. And what I noticed was that my managers were investing in some hot stock or real estate. And at this time it's 2010, and so all we see on the news is how terrible, there's foreclosed houses everywhere. And, one of my colleagues, he had like 5 rental houses already. He was basically, and one of my managers had like almost 20. And we thought like, wow, this guy's like, dude, it's like awesome. He's like a superhero or something, a real estate superhero. And, it was a cool thing. And he was telling us how he buys these things for so cheap. So, me and my friend who already had the 5 houses, we said, well, hey, let's buy some houses, but let's buy a lot. We're making really good money here. So we came up with this plan, and we were going to buy 80 foreclosed rental houses. So I had this big, beautiful spreadsheet. We were going to take them down over, I think it was like an 18-month period, and all we needed was $3 million. So we ended up calling all these banks. So a little bit, if you don't know where Papua New Guinea is, most people don't know where it is anyway, but it's on the other side of the world, and they're 13 hours ahead. So whenever we're waking up, they're usually going to bed, which worked out perfect. So I would finish my normal 10-hour day. Then I would continue working because now the United States is awake, Houston's awake. And so I could, catch people in the morning. So usually I catch them for the first half of the day, and then I have to pass out, go to sleep. But anyways, I'm calling all these banks in the morning and trying to get this loan. And most of them are hanging up on me or laughing at me. And, because there's just some kid trying to ask for $3 million, and you got to send them this spreadsheet. And they're just, anyway, finally, one of them responded, very nice guy. He said, just go buy an 80-unit apartment complex, And I was like, what do you mean? I can buy an apartment complex? And he's like, yeah. And so sure enough, I changed my Google search. I started searching for, multifamily brokers. And sure enough, I found a whole bunch of them. They're all over, and I found this thing called LoopNet, which I don't know if it was any good back then, but I know it's not any good now. So I didn't know it a whole lot back then. I mean, you don't know a whole lot. Everything seems good. So anyway, but I didn't know anything about multifamily. I knew a little bit about houses, but really nothing about multifamily. So I bought every book I could buy that came on a Kindle, and I was just reading. I mean, I was reading about a book a day because nothing else to do. There's no Instagram, Facebook. The internet was incredibly slow. So it was really very fortunate, incredibly slow and very expensive. So anyway, I just self-taught myself real estate through reading books. And, now people basically do it on podcasts these days, so anyway, same thing or similar. And anyway, just with reading, probably half a dozen books, I got up the courage and felt confident enough to go ahead and buy my first property. So, we went on our hunt. We had, brokers showing us all kinds of stuff, and we didn't know what the heck we were doing. And finally, we got one, and we knew one thing, and the one thing that everybody knows about real estate, which is location, location, location. So we found one. It was in a great location, and we put an offer on it, and and we got it. And the guy it was a unique situation because it was actually two properties, and that were split by a road. And what we didn't know was that the other property, the landowner, or sorry, the owner had already sold to the neighboring business, which was a Jeep dealership, and they basically tore it down a few months later. It was basically, he was exiting real estate altogether. So, and now that I'm thinking about this now and in real time, he was just licking his wounds from that, butt kicking he probably got from 07, 08, and was just glad to be exiting.
Yeah.
That's an interesting revelation I just had. But anyway, so we buy this deal, and I guess kind of what gets, and I'm going to get back to the whole theme of transitioning. So I'm still working for Exxon at this time. Buy this deal, and it was great. It was smooth. It was the easiest thing possible. You're like, wow, everybody makes it sound like it's so hard, and we went, and we just, we thought we were geniuses, Sure enough, what happened was we just did everything wrong. And that's why it seemed very easy because, due diligence, what is that? We just went in and you just go through the motions and you do the lender required stuff. But there's this whole other checklist of stuff that nobody tells you about that you're just supposed to know that you need to do. And we didn't do it. And so kind of fast forward 6 months into the deal. And so now my whole work situation has kind of gone upside down. I end up losing my job 6 months after this deal because of just, again, political stuff. If anybody who's been in big corporate America knows there's a lot of politics. But anyway, so in the midst of that happening, I've also got, I get notified that we don't have insurance because we had bought fraudulent insurance, and we get notified that, so we were 4 units into a rehab. And part of that renovation is you have to apply for a permit because we were adding ACs. And anyway, part of the permit process was getting environmental because, environmental is normally something you do before you buy a property. Well, we hadn't, and came back hot for asbestos, which was, I still have the email from when I first got that report, and it said you have asbestos. And it's just, I can't say what I replied for this. Explicitness, but it was interesting, to go back through that, in 2012 when all that was happening, and so we sent everybody home immediately. You're stuck. You can't touch the unit, and so anyway, we have that going on. Then there's the whole no income thing, and so I'm now in Houston. I've got my property that's at 77% occupied, negative cash flowing, 4 units that I can't touch, plus 2 other that are just vacant. And so I was stuck, and I didn't know what to do. And I had a property manager who I'd hired that was previously a single family manager, and this was his first kind of leap into multifamily, and he did it very badly. So anyway, the next day I joined a local real estate club, and they hooked me up with the right network. And the network is huge in the industry. There's knowledge is certainly good, but the network in your local market is extremely powerful because you can know exactly what to do. You can know exactly what you need to do and calculate everything perfectly. But if you're using the wrong people or inexperienced people, doesn't matter. So, and that's where I met my 2 partners now, and we came up with this plan, and we basically just our plan which was crazy. I mean, even the owner of the top guy at the real estate group I was with, and all the other advisors were telling me don't do it because I don't know if it's just because everybody just was coming out of that crash, and so because it was a big thing, like we purchased the property for $25,000 per door, and we were telling people that we're going to spend $30,000 per door renovating and just gut the whole property and take it up to a Class A level and rent it out, and also we're going to lease it down, which means vacate the whole property to do this and then lease it back up. So anyway, we did it. It's crazy, but that was our only option, right? That or sell the property at 77% occupied and lose all that money, and then also you're still not employed. So I was like, you know what? At that time, I really had nothing else to lose.
Yeah.
So we came up with this plan. We got some banks, but we got a bank behind us. We signed full recourse on it, cashed out my 401k, dumped the 401k in there for additional collateral, and went to work. And I tell you what, that was probably the most stressful 9 months of my life, because Elon Musk has this one quote about being an entrepreneur. It's like chewing glass and staring into the abyss. And that's what this was, because I was I was basically digging a deeper and deeper hole with no idea what was going to happen. And whenever I turn the lights on and then try to lease this back up, it was I thought I did. The numbers, the data told me it would work. So anyway, so that was the first one. And, but along that route, so after Exxon, there was a 6-month period where I intentionally stayed unemployed. I just focused on real estate. All I did was I took every seminar I could. I took every educational class I could. I took, I'm a big proponent of CCIM. I've taken all of their CCM coursework. And, I just educated myself as much as I could, because at that point I said, all right, well, it wasn't like I hadn't made the decision yet that I was going to be in the industry. I made the decision that I don't want to lose my money. I'd worked hard for 5 years, and at that point it was like, okay, I need to save the earnings from that 5 years of work, and so that's what the focus was. And then I did I started my transition with, I don't have any money coming in. The property is not cash flowing. I got to support myself. And so I got a job. You just get a second job. And I think it was one of the harder things is, it was really tempting to try and get another job with another major. And but the problem is I would have had that same workload, that same high stress, high demanding workload, and I wouldn't have focused on my property. And, looking back at it, I'm so glad that I got laid off, because the reason all those bad things a big part of the reason all those bad things were happening in the first 6 months of ownership was because all my attention was on my day job. I was working and I couldn't focus, and all of the majority of my money was coming from that, too. So, I made the conscious decision. I was like, I'm just going to get a nice kind of sales job. Took an oil and gas sales job. No offense to the sales guys. It's a great living, and it certainly has its challenges. But it was a less stressful for me. It was just less stressful. And I had more free time, more ability to control my time. So I was able to spend, probably 6 hours a day with them and another 6 hours a day on my stuff. And so I did, I continued with that and was able to support myself, and slowly but surely the property kind of came around. And then, just when things were kind of going at their peak, so I'm towards the end of my first year, with my second job that was supporting me for my side business. I ended up getting laid off because that company got bought out. And I was like, what the heck is this? So it was the craziest thing, but it was cool because right at that time, we had just finished the rehab. We were already talking to lenders. Actually, we already had a term sheet from a lender, and we had started the loan process to refinance, and we had seen the amount, and where we made over 200% return tax-free on that first one, which for me was huge. It was like my original investment plus my 401k. It was great. And so I was at that point, I was like, I'd made the decision. I was like, this really works. When that check comes in, that's the proof. That was the proof positive, at least for me. Like, all right, this really works. It's not, it's not just something I read in the book. It was like, no, this really worked. I can see those numbers in my bank account. And so that was when I made the decision to, all right, I'm going to try and do this full time now.
Yeah.
And, but still had a plan B. I also went and got my bartending license because I was like, just in case, it's still as crazy. And I still remember sending my mom my bartending license, and she was so proud of her engineering son. I'm being very sarcastic if you can't tell. And So anyway, so that was the challenge. And looking back at it, I did a lot of the right things, but not intentional. They were just because I just had to. I was staying alive. But if somebody is in that situation, though, I mean, that's what you have to do, though. I mean, I think the hardest part for people who are in these very strong positions is, the expenses.
Yeah.
I was, cutting my expenses was one of the hardest things because I was just used to a pretty flamboyant lifestyle. And I look back now and I'm like, damn it, I wasted so much money. I could have had so much more property if I would have done whatever. And, but it's just adjusting. And then also there's that, there's a big part of that ego thing. I used to love telling people I work for Exxon, I work for Exxon. And I'm sure it's the same with other people who work for Google or wherever, and that's, it's a challenge, and you just gotta let it go. There's no room for ego, because if you really want to do this, you really want to be a syndicator, you're gonna have to eat some. Well, you got to go through some stuff, and it's not gonna be pretty. And people looking out on you, or looking from the outside, you're not gonna look the best. You're gonna have mud on your face. You're gonna look like and your friends are going to be living that same lifestyle. But eventually what's going to happen is it's all going to switch. And it's going to switch. I mean, it's going to take time, but literally it'll happen overnight. Like you'll have one big transaction go through. And it's just all of a sudden, at least that's how I felt it was for me. It just really started picking up steam. But for a couple of years, it was just putting in that time. And I was like, man, I hope I get back up to my Exxon salary,
Yeah. Well, that's what I want to ask you before we even move on is, I wanted to ask you, number one, so you had referenced LoopNet. Did you meet the broker on LoopNet that ultimately found the deal, or was that deal actually on LoopNet?
No, that deal was on LoopNet. And what I did was I went to LoopNet, and I just went to LoopNet, looked at every deal, and I wrote down who every broker was, and I just started contacting them.
Good.
And then from there, they started showing me deals, and he emailed me the deal, and then he sent me the link, and it was on LoopNet, but I didn't find it on LoopNet. It was because I found the broker first, and he sent it to me. Once he knew what I was looking for, he knew our parameters and stuff like that.
Well, so the other question I had was, how long from the time you purchased it to the time that you said, like, wow, I got this 200% return check, and like that was the proof right there for me? How many years are we looking at there?
So, I'm sorry, repeat the question again.
From the time you bought that property to the time you guys leased it up.
Right. So I purchased the property in October of 2011, and the check didn't come out until the first quarter of 2014.
Yeah.
So a good 3 years there, and it was that was my learning period. It was 3 years I was just on one property. I think I've heard your podcast with Joe Fairless. I think you're up to like 200 some units, and you're only doing this 2 years, man. That's awesome.
Yeah.
And so that's how it is sometimes. So don't get discouraged if you're on one property. I was 50% owner of one property though. So, and it was a completely different situation. But what I love about that property was that anything and everything that could go wrong or that you could do to a property, we did. I mean, we took a Class D property that had, I'll just kind of run through some of the issues that I can remember off the top of my head, but we had to do all new roofs. We had to add air conditioning because it didn't have central AC. We had to replace 200 some feet of sewer pipe. We did the asbestos abatement. We gutted all the interiors, came with all new cabinets, granite counters, stainless steel appliances. We did all new flooring, all new fixtures. We added Wi-Fi to the property, put in a lot of amenities. And I think we did some window treatments. But it was everything. And so after you go through a deal like that, it takes a lot to get you scared. Like there's really no deal that'll scare me. The only thing that'll scare me is it's not the physical aspects of a deal won't scare me. I'll put that.
Right.
I'll be more cautious on, if the numbers don't check out, the demographics, if I don't think the rent's there, that's a different story. But, if you tell me a property is physically in a bad shape, I'm not worried about it. But, I know what it costs to get it done. And I know, it's a whole process to go through something like that. It's not, I mean, you can even if there's the whole calculation part of what it costs. Then there's the execution part of getting it done. And it's very challenging.
Yeah, but I mean, when you think about it, like you were saying, 2011, first quarter 14 is like a little bit over 3 years. I mean, if you came to an investor, now I understand though, you were like, yeah, but I was sacrificing lifestyles, losing jobs, getting jobs, doing size job. Like it was a tough time. But if you came to an investor and said, look, in 3.5 years, you're looking at 200% total return on investment, that actually sounds like a good deal.
Yeah, on a refinance, you're still going to own it. Usually you would say that on a sale. No, we refinanced it and we still own it today. We technically sold it to the bank. So however you want to look at it, but it was a great deal. We still own it today. We're actually we actually toured it yesterday with some developers. So we're going to be scraping that one in a couple of years and be redeveloping it. So that's it was a great location, and we're going to maximize our return on it. So, what else? Oh, and the other thing we're going to talk about was the importance of investing, and parents teaching investing to their kids. For me, I'm sure like many other people around my age, I'm 33. My parents are always college. You're going to college. That's it. And college is great, and I don't want to say that I'm on that side of the aisle that says college is bad. I learned a lot in college. I think I'm grateful that engineering degree. While I don't use any of it really anymore, what you do get from a degree in general, or at least for engineering, I can't comment on others, but is they teach you how to think, and that was very important. How to problem solve and stuff like that. So. Anyway, I think that's, those are certainly useful skills to have and can only help you in business. And then there's, but from my standpoint, I didn't know what an entrepreneur was though, so I just knew go to college, get a job, and that's it. So I went to college and I got a job, and I did what I thought I was supposed to do. And, I graduated in 2007. I was like, and I just feel like I was oblivious to the whole housing crash. Like, I feel like, for some reason, I had no idea the housing market just crashed because it never registered to me until like 2010 or 11. And I was like, oh, that happened. I was like, this, whereas if my parents were, I'm not blaming them or anything. I'm just saying, if I had parents that were more entrepreneurial, I might have known about, oh, you can buy a house and you can rent it to people. Yeah. It's never something that we talked about. My dad he worked as an engineer for a power company, and my mom was she's a stay-at-home mom, but she has her own little kind of hobby business that she does. But it wasn't, there's not really anybody that does stuff, And like for me, like my kids, like we're gonna go buy houses. Like summertime, yeah, let's go check out a house. Let's flip a house. Yeah, like it would be, teach your kids like the importance, the time value of money, the whole investing mentality. Put in some money now. And then in a future date, you're going to have more money. Yes. I just feel like, people don't talk about it, and they don't, it's not even just talk about it. It's the whole, like doing it. Like, I'm going to take your hand and we're going to do it. And then so now you won't wait so much longer in life to do it yourself. Yeah. You've already gone through the motions, and you would have, you'd feel more comfortable doing it. Yeah, for sure. And you don't know what the markets are going to be at. And, so like if I personally would have had that, I mean, I would have been graduating from university with, working, making almost 6 figures a year, right when the housing market was crashing. Like, dude, like, I would have just killed. But too much shopping. Yeah, but had no idea. So. Yeah. No, I'm in alignment with that. I mean, I have 3 little ones. My oldest is 10. My youngest is 3.5, a little bit older than that. But and I have one in the middle that's 6. And I've been with my daughter, she's the oldest, since I would say 4 years ago, 4 years ago. So that puts her right around, about 6 years old. She has been, writing private money. Her and I have been doing private money loans where she lends me money from her banks, and she knows I hold it. And when she gets it back, it's more than what she received. And we sign terms. I mean, she understands interest, like so much more. So exactly what you're saying. And then
she went, I know, I'm obviously passionate about apartment investing, and I'm on the active side, but I'm also a limited partner with some funds that I'm disqualified for using in my own deals. She came to help us set up the bank account, roll over the IRAs into the solo 401k. She understands that we wired that to, this 50 unit complex in Alabama. So she's getting exactly what you're saying you wish you had.
Yeah.
I'm providing that to her, and as well as my sons. They're just a little bit younger than she is.
You are absolutely setting them up for success, man. That is awesome. Like, and there's and so maybe somebody's listening is not in that situation where you can do that, but there's this game that we like to play just in general. It's called Cash Flow. It's the Rich Dad Poor Dad game, and I highly recommend it. I'm sure you've got a copy, but it's just a great game, and I played it with my younger brother and sister, and they love it, and it's their first kind of exposure to what I do. They're like, because you're playing this game and you'll pull cards like, oh, water pipe breaks in your property, pay whatever, or somebody's looking, somebody's trying to buy a property, and you just make a huge windfall, and you can see the lights kind of go off and the gears starting to turn in their head, and they start to understand it without any kind of monetary involvement. And so I think you should people should check it out if they haven't already. Or even better, like if you're in a position to do what Dino's doing here, man, that hats off to you, man. That sounds awesome.
Yeah, thank you. Well, that's one of my missions is to break the cycle. You talked about, some of my parents go to work, and, they really didn't teach this, and kind of ties back to rich dad, poor dad, I guess, mentality. But I want my children to say, now, whether they take the advice and run with it or not that ball's going to be in their court. But I'm going to do everything possible to encourage them. And they're going to be able to say, now, I saw my dad buy apartments and lend his own private money to fix and flips. Everything and my dad used to write contracts that we used to sign together, and he would pay me back like in 4 months or whatever, this much interest. So they're going to be aware. But what I'm trying to get at is my ultimate goal is, for example, my daughter loves dancing. She's 10. It's like her world. She has 4 different styles, and she's in dance 4 out of 5 weeknights. And anyway, I would want her, if she keeps with this passion, I would want her to continue to be a dancer and not worry about how much money she makes dancing, because I've taught her not to save a pile of money and live off of it. I taught her to create a stream of cash flow today that supports your lifestyle.
Yeah.
So go and dance. I don't care if you make $20 every Broadway production you dance. That's not why you're doing it. You're doing it because you love it. Your money is coming from the investments you've made.
Yeah, there's too many people out there working in jobs they hate because they have to, because nobody taught them how to invest or anything.
For sure.
So, yeah. You said something that kind of reminded me of, so back to the transition process, it's never a smooth thing. What really happens is you tip, or at least my situation was I had that big windfall that I talked about, right? 200% back.
Yeah.
And you live off that, So in the beginning, you're kind of like an elephant hunter, right? You just have these big wins. And then basically you take all that money, you put it in your savings, and you just have an automatic transfer back to your checking of, as little as you can afford to live on. And that way you just live off of that amount until you get the next one. And eventually you get to where the cash flow of the properties is supporting you, and not the sales and the refinances and stuff like that. So that's the other part of the transition, is just understanding that in the beginning, the cash flow is not going to support you. I mean, unless you're most likely the cash flow. I mean, if you're buying a property 100% you, and it's a big one, yeah, maybe, but I think for most people out there, if they're a limited partner in a deal, or even if they're a syndicator in a deal and they're doing their first couple of deals, you're not going to live off of that cash flow initially. It's going to probably take the 4th or 5th or 6th deal before you're finally, you're comfortable, you can relax and whatnot. So, and one other tidbit, I just wanted to throw in is, it's the market's different. You hear, everybody's out there, they're seeing all these podcasts, and there's some really great guys out there. And I just caution people to just be aware, and myself included. Like we were buying stuff when properties were cheap, and so you hear these amazing returns. Like that same property, I wouldn't have been able to buy it for 25 a door today, even if it was in that same exact condition. So it was just, a big, a large part of the return I got was just the market, in all of my properties.
Mm-hmm.
And I'm amazed. I'm grateful. There's a book called Outliers. I can't remember who the writer is, but it's a great book. And basically just talks about there's a lot of factors that go into making a lot of the great leaders and businessmen that we think of in the world. And a part of that is the environment and where they're in. I just remember that one story about Bill Gates and how he got his start. And he was one of the first people in the world, his family was, that had a computer or access to a computer. There was this library down the street that had a computer, and he would just spend his nights and weekends in that library programming away. Like, imagine being the first person in the world on a computer. Like, that was just insane. Right. And so, of course, he's going to be, because of his environment, So that's all. I'll just caveat people is, I'm not some brilliant person. I think I did pretty well. And, I certainly think that we do really well in our analysis. But in the beginning, I was just like everybody else. I was learning just like everybody else. I was making those same mistakes. And the only difference is my mistakes were really kind of shadowed over by the market. The market just, made it not as painful. I make those same mistakes now. Maybe I'm not sitting right here,
Yeah. Yeah, no, I hear you. And definitely it's also, this isn't, syndication and transitioning from high income earner to active, full-time investor. It's definitely, you got to have a marathon approach. It's not a get rich quick thing. It's something that if you do it your way, where it seems like you're holding them, not flipping them, or you're refinancing, like cashing out, but holding for cash flow. That's going to build wealth ultimately as you scale up to enough, but it will take several. And the thing is, though, if you love it and you're buying right and you really love the process, it doesn't matter if it takes 10 or 50 years. You're having fun along the way, and you get there's pride in what you're doing, and you like providing people a place to live and changing neighborhoods. So all that, and at the same time, it's bringing in income. So, and teaching you a lot of valuable lessons. I mean, that learning what you went through there, you can't learn that in any apartment investing course. You have to go through it.
Yeah. Oh, and the other thing is you're providing a vehicle for other people who can't step away from their job, for whatever reason, but have money to invest, and they want to invest in real estate. There's not, and want that personal kind of a feel. Like our investors, they can come, they can touch the properties, and a lot of our guys are Houston based, and so your other option is you're buying stocks or you're investing in a REIT or something. And so I feel like multifamily syndication is truly that it still has that intimacy about investing in it, which is awesome. You get to know people, and you get to it's basically a marriage to these people for the next 5-10 years, however long you own the property. And so it's I think you're also providing a service, and I think that's kind of where I've shifted. In the beginning, it was just for me staying alive, right, providing food, but now it's like I've looked back and I've realized all those. I got one investor who's been in every deal with me, and the guy could retire if he wanted to. I'm like, dude, just what are you doing? And but he's he's just not there yet, and that's fine.
Yeah.
But he feels great because he's like your daughter, right? He's like, if he has a bad day or somebody gets on him, like if he loses his job, he's not worried about it.
Yeah.
So.
Yeah. And it's definitely more intimate, because when you think about the stock market, and if you go and invest, you and I go and invest, we pick out the best company we believe in or whatever, $100,000, like that CEO's never going to call me. Every investor has access to this. Like you said, most of yours are in town. Same here. A lot of the investors that participate in our syndications live here in Colorado, even though we're not buying here. You just don't get that type of intimate one-on-one experience with the stock market. And you have no control. I have a stock market horror story, not shared on this podcast, but there's nothing I could have done. In this world, at least I get to choose if I like this as an investment vehicle, talking about multifamily, choose my operating team that I'm going to align myself with, and then I get to choose from the menu of options they give me to invest in, and they have the operating team and that asset manager. If they're working with the property management company, which because you now, you own one, if they're keeping a close eye on line item by line item and doing this on a monthly basis, as soon as things start to veer off course, they have the opportunity to have a conversation and course correct.
Yeah,
so
absolutely. Yeah, it's I feel like, there's that, with the stocks, that's, never mind. I don't even go there because it's too volatile and nobody can guess the stocks, and people who think they can, well, they're just kidding themselves. So, yeah. I think we're going to talk about, what else did we have to talk about? Actually, I think we might have covered it all.
Well, the goal was to share the story, because I have a lot of equity and partners that tune in, because that's mainly what we're about, is teaching about that. And then you just sharing your transition from a high income earner, that story you had about it all started with this one, the big return, and now how you've scaled up, and with the ultimate goal, I think it was 20,000 doors. So, and just letting them know, hey, it's not all sunshine and rainbows. As a process, there's a long-term view, and you just have to play the long game or have the marathon approach to it, but it can happen.
Yeah.
What you have to do is, no matter where the market is, you have to buy right, not over leverage. Make sure you buy for cash flow, not just appreciation, which is what you kept getting at, is like, hey, if that happened today, we're on the cusp, but the appreciation wave might be peaking right now.
Yeah.
So,
I think, I think the one hesitation a lot of investors looking at these days is, everybody's talking about this recession, and
yeah,
I don't know if you saw the clip from on Bloomberg, I think it was this morning or yesterday, when Goldman Sachs decreased their probability of a recession for the next 4 quarters from 20% to 10%. And it's, let's just say, let's assume if there is a recession. All right. Historically, most recessions have lasted for a year.
Mm-hmm.
So you're in these deals, and you're not going to, more than likely, if you're in a recession for the year, it's not going to be the end of you. You will probably come out the other end and you'll be fine. Will you make as big of a return that year? No. Are you going to increase rents that year? Probably not. But are you going to lose everything? Also, probably not. So I think that's what everybody spooks about. Oh, recession, I want to get it. Well, recession just means that you maybe won't have an 8% return a year. Maybe you get like a 2% or 1% or no return.
Yeah.
But it's not a negative return. You're not losing money. And then you also got to realize, like, interest rates are a bit higher and they've stopped pushing them. So that's a good sign. One, you've got a buffer there, right? So if something, if things really get bad, what's the Fed going to do? They're going to drop the rates. And then they've already indicated they're going to stop. They've already indicated that they're going to stop raising the rates, just giving investors and the economy a lot more confidence that we can go out and we can do business.
Yeah.
So I think that was a big concern, and so I think we're going to see a big correction here in the market in the next couple months.
Yeah, but again, I think this is still, if done correctly, I know this is still the asset class. For me, it's what I invest in, and it's what I do. It's what I believe in. We do workforce housing, so B and C class, and that's the backbone of our economy. People will always need a safe, affordable place to live.
We're building our first one right now, and the loan just got approved last week. So it's a really big achievement for us. It's been something that we've been working on for the past 3 years. And, I thought I knew multifamily until I tried to build one. And I guess the closest way to relate the two is to, buying existing. And, this is my bread and butter, is buying existing. So I'm not trying to be insulting at all, but it's kind of like paint by colors, because, you're given a rent roll and a T12 financial, you kind of know, and you're making your own tweaks and adjustments to it. But new construction, you got a blank canvas. You got nothing there. You're fabricating every number. And so it's just been a true kind of learning process. That's why it's, for 3 years, we haven't talked about it really. We've been dead quiet because it's been learning and going on the process and getting our phones. But anyway, what I was getting at was that even with us, we're trying to build workforce, a bare bones product. And it's still not going to be as competitive as if just buying a Class B and C property that we buy and renovate. Now, is it that far off? No. I mean, I think that's why we shifted more towards development. And I'm not saying that buying workforce housing is bad right now. I'm just saying that we noticed that the difference between buying existing and new development is getting a lot closer per door. And so that's why we made the decision to go ahead and start looking at getting into that so that we can be a part of that next cycle.
Yeah. Yeah, that makes sense. Well, look, just for the sake, this is awesome, and we can talk we can probably talk all night till the sun comes up. But we got to wrap up just for time's sake. But I do want to ask, give you opportunity to share before we ask how to get a hold of you. And I'm going to have all the links and his contact in the show notes as well. But what currently excites you? And tell us about, I know you talked a little bit about development, but what projects are you working on?
Yeah, so just that one new development is the biggest. It's been a 3-year project. It's coincidentally, it's like that first property that also took 3 years to come to fruition, but maybe that's our number. But anyway, it's our first new development, 168 units, $21 million. And it's a challenge. It's been a real big fight. We haven't broke ground yet.
Yeah.
Another 18 months to build, and then another 6 months to get it fully leased up. So 6 to 9 months. So it's that, talk about a marathon. So that's what gets us excited. Also, if anybody is in Houston and happens to be seeing this before April 25th, we're hosting an investor happy hour here in Houston. So you can, the links on the page, you can reach out to me. We'll send you an RSVP. It's here in Houston. Come get some free drinks on us, and we'd like to meet you.
Yeah, we this will definitely go live way before that. So there's a chance that someone will see it either on YouTube or listen to it on iTunes or Stitcher, and reach out. That would be great.
You got to show what this Stitcher thing is, man. I'm behind apparently.
It's just honestly, I think it's people who have a different platform than iOS, and that's how they can listen to podcasts.
Okay. Very cool.
It's just it's the same podcast on a different way to listen to it. Okay, so I'm going to put it in the links, but how do they get a hold of you?
That's right. So you can go check out our website. It's TriArc, TriArc, so realestatepartners.com. And you can just shoot me an email, info@triarcrep.com, or give us a call, 281-836-4181.
All right. Well, hey, Joseph, it has been great having you on the show. And I hope that you listeners have found this information helpful, whether you're here for the education, the entertainment, or if you or someone has a problem finding the right place to invest their money, please help them by sharing this information. I don't have anything to sell, but I am on a mission, and I will be delivering quality, consultative, educational content on a routine basis, whether that be for me or great guests like Joseph here. Thanks for tuning in. Make it a great day. You certainly deserve it. This is Dino Pierce, CEO of Edified Equity, signing off. Goodbye.
Thank you.